Welcome back to your North Alabama market update. There's been some changes in the market in September. We'll break down what's happening with home sales and prices and inventory, and make sure you stay tuned until the end to get our recommendations for both buyers and sellers. Across the entire Valley MLS area, closed sales were up 9.5% compared to last year. That's showing a continued strength in buyer activity, even as the rates were remaining elevated in September. The median sales price dipped 1.6% year over year, so basically stayed flat at 305, while inventory rose 4%, giving buyers a few more options than we've seen in prior months. Homes, however, are taking longer to sell. The average days on market jumped 36% to 61 days, a clear sign that pricing, presentation, and of course, who you hire matters as the market normalizes. For single family homes specifically, pending sales surged 25% as interest rates began to fall in September, and closed sales were up 9% year over year. That points to a very strong October closings and probably the rest of the year in Q4 as interest rates have dropped 1%. That typically increases affordability by about 10%. So we've seen increased affordability. We're gonna see likely more closings in the rest of 2025. The median sales price also ticked down slightly to 310, while the average price held pretty steady around 349, a less than 1% dip there. The average time on market climbed to 60 days. That's up 36% from last year. And inventory also rose 6.6% to about 4,500 active listings. However, you look at the Madison County, Huntsville submarket, inventory was actually down 8% in that submarket. Inventory increasing 6.6% is actually the first time in the last 24 months that we've had single-digit inventory increases. So that's definitely something for us to keep in mind and really keep a watch on as interest rates are starting to fall, more buyer activity. Will we remain in this balanced market? We're basically at a 4.3 month worth of supply worth of market. That means we're in a balanced market. If we dip below that 4 months, we'll approach into a seller's market once again. The townhome and condo market is definitely telling a different story. New listings dropped 38% as a lot of builders are just pulling out of the townhome market. And pending sales, of course, were also down as new listings were down. They were down 17%. Closed sales actually rose 12% compared to last year. That's because builders are just getting rid of their excess inventory. Don't expect that trend to continue. Prices have softened, of course, as builders are liquidating their inventory. The median sales price fell 6.4% to 234, and the average price 7% to 268. Inventory plunged 26%, and month supply dropped 29%, tightening this segment considerably, which it was really well oversupplied. And so the builders have done a smart thing by pulling back on the supply in that market. Sales momentum is definitely picking up. Pending sales are way up from last year, hinting at a stronger activity heading into Q4 as interest rates are starting to drop. Prices have also flattened, but they have remained stable, even with all the uncertainty that's been out in the marketplace. That's a very positive sign for the Huntsville market. Affordability, of course, has now has improved because we've seen increased wages, we've seen interest rates now drop, and home values remain flat. And so you throw all those three variables into the equation, and home affordability is on the rise. First time we've seen that in the last couple of years. So that's a very positive thing for buyers and also sellers looking to sell their home. Expect to really, I think probably the next thing though is expect to see home values start to increase again as affordability is getting better and interest rates are dipping. We'll see more buyers enter the marketplace, which will likely tip the prices back up. Inventory is also up slightly overall, but most of that gain is really in single family homes. Townhomes and condos are tightening as builders exit that market. And as I mentioned before, Madison County saw an approximate 8% drop. We're gonna keep a close eye on this trend to see if it continues because this is the first time that we've really seen a drop in Madison County over the last couple of years. And it's the first time we've seen single digit appreciation overall in the overall North Alabama market in the last 2 years as well. If you're a buyer, you have more options today than earlier this year and slightly less competition. However, that is starting to heat up with interest rates starting to fall. I would take advantage of these interest rates, kind of the coupling of the interest rates coming down Plus, you still have some motivated sellers out there this time of the year, and also new construction promos. So I think we have an opportunity as buyers to arbitrage the market, kind of combining those two events. I don't know if that will continue as interest rates come down. Builders and sellers may not be quite as motivated to make deals. So I would take advantage of that as up from a buyer perspective. If you're a seller, success comes down to pricing it right from day one, making sure your home is staged right and shows at its best, and of course, hiring the best. Who you hire matters. There's been an increase also in searches nationwide for the search term help with mortgage, which is why we're relaunching our instant offer program to assist these home sellers in our local market. With homes taking longer to sell, who you hire matters now more than ever. Well, that's a wrap. That's your September 2025 market update. If you want a personalized market analysis for your neighborhood, your home, your situation, or if you're thinking about buying or selling, reach out to our team at Matt Curtis Real Estate at 256-333-MOVE, because who you hire matters.